Welcome, friends, back to Basic Tax Training. Tonight we are doing Basic C, which is the third session, and we are going to be learning about income and adjustments. Some of us for the first time, and some of us it will be a refresher if we are coming back from volunteering in a previous tax season. I am Holly Daniels. I'm the Senior Manager of Volunteer Resources at Prepare and Prosper. And so I get to think of new ways to do training and better ways to do training. So at the end of our session tonight, I'm going to share a little survey and you can share what worked for you about tonight and what you would have liked to see us spend more time on or talk about differently. See you all as collaborators in that way and making training better. And we are lucky to be joined by Jeff Moss. And so I'm going to turn it over to you, Jeff, and ask you, would you just share a little bit more about yourself for those of us who haven't gotten to be in training with you before?
Sure. So I am a 20 plus year at this point in time a volunteer for Prepare and Prosper and in earlier iteration of the name of the organization as well. I typically am somebody who can be found at the Hallie Q. Brown site. I got my site assignment today, so I'm assuming that at least some of the people on this call today have received their assignment for what site they're going to be working at. And let's see here. Oh, reviewer. I tend to be a reviewer, um, which is a role that we encourage people to step into after a little bit of gaining a little bit of experience as a preparer. Uh, so we're going to do a quick where are we at in your process of getting trained to be a preparer with VITA and with Prepare and Prosper. You've done your intro to the tax clinics, you've done your intake paperwork. Yesterday, you did filing status and dependents, or at least a lot of you did that. Um, Today, we're going to be learning about income and adjustments, which are very important on a 1040 form. Your next step will be going on to learning about tax credits, then finishing returns, renter and homeowner stuff, and then you'll have some practice lab stuff to do, at least if you're not a returning volunteer, because we want you to get a little more hands-on experience with the software than you're getting during these trainings themselves. All right. Now, what we're going to do tonight is we're going to talk about interviewing about people about income. We're going to talk about the most common types of income. We're going to spend a little time in tax layer. Then folks will get a break. Then we'll move on to adjustments, deductions, and taxable income and tax. And I think that's about all I need to say on this slide. You've seen it. We're going to move on. All right. When we talk about income, one thing I'm going to point out on the slide, sometimes in the upper right corner, you'll see a page reference to your Prepare and Prosper manual. I would recommend that you keep your manual nearby as you're going through today's training and all of the trainings, because sometimes you're going to want to look in the book and see what we're talking about. Income stuff starts on page 68 of your manual.
Hi. I don't have a manual. I'm not sure if I was supposed to get one in person or if there's a virtual edition. This is just something I missed. I got home from traveling last night, so I'm
No
catching up.
worries. Holly, do you want to take this, or
Oh, thank
Yep.
you.
I
Yeah,
feel
we
like
have the
you're better at talking about how to get to all that stuff.
yes, I'm
But
going to
I
I
don't
just
have
show
got
to.
the
yeah,
But you
link.
don't have to.
I'm going to show you guys around later. But for now we have the link to the PDF of the manual in the chat.
Thanks so much.
Excellent. Okay. Now, so income is like incredibly crucial for a lot of the people that we see in our clinics. Um, so you need to get yourself grounded in the concept that people sometimes get money from places. There are certain types that you're going to see more frequently, and those are what we're going to cover in this training today. In your manual, you'll see that there's a whole bunch of other kinds of income as well that, spend some time in your manual, learn that stuff. or at least know where to find it in the table of contents or the index. Now, first, before we really start talking about the income stuff itself, we need to talk about how to learn about the income from the person that's sitting in front of you. And your entryway to that conversation is this intake form, of which you're seeing page 2 of the intake form. And this is how we go about talking to people. I have a quick question for anybody. Can you see my mouse, my my pointer on the screen or not?
Yes.
Okay, cool. That's useful for me to know. All right. So talking about income, we want folks to I mean, you need to cover everything that's on the interview sheet on page 2, page 3, and page 1, to make sure that we get things covered properly and don't miss information that's important that will cause a problem on the return. So wages, tips, retirement income. Down here we got gambling winnings, payments for contract, self-employment. There's all sorts of different kinds of income. And the main thing, aside from doing the work and making sure that you have checked with everybody on what their incomes are, the other thing is making sure that what you have in front of you is the correct certification level. And I'm forgetting how much has been talked about for advanced versus basic certification levels, but uh, before you're able to go out to the sites and do preparing, you have to take a test. You have to take a series of tests, and the tests are an advanced test or a basic test. If you are a basic preparer, then you're only allowed to touch the stuff that has a B next to it. And these kind of work the same on either side of the column. Here you see under tips, there's a B and an A. So it depends on what's going on uh, for whether that's going to be advanced or a basic. It's basic when reported on the W-2. This form has been improved a little bit to make sure to help us to know when is what makes something an A versus what makes something a B. But you should always be paying attention to that as you're preparing your return, because we want to make sure that you don't end up accidentally preparing something you haven't actually properly been trained and tested on how to do it. The other thing we'll mention, you can ignore this A versus M in the income for renting out your house or room in your house, in the sense that that you can ignore the M. That's for military stuff, and we don't do military at our sites. The other thing is that knowing the income stuff helps us to know, is this going to be an in-scope or out-of-scope topic, something that we can touch, and then we're allowed to do according to the IRS, and stuff that the IRS doesn't want us to touch with a 10-foot pole. All right. So now you can see, so I want to switch back quick to page 2. This next slide is focusing in on the gray area, which is the area, the yellow area. Maybe you're gonna be filling it in because the customer is the first one of the day, and they got seated in front of you without getting to fill in all their paperwork. Sometimes they will have filled it in for you, but you're always going through it, and then you are giving the reviewers information over on this side so that they know the full and complete situation. And the way that the IRS wants us to handle making sure that the reviewer has been given all their information is, you're either going to line by line indicate the information or that it wasn't applicable. And you see one example here, first method. Or the second method is anywhere where it's all NA. If it's just a whole bunch of NAs, it's going to be easier for you to go NA and draw a line down, and then initial. Or maybe the example we have here is maybe I would do a quick NA line for those three, an initial, and then I do my next answer, and then it'd be a whole bunch of NAs down and a second initial. That's also an acceptable method. Questions about that? As a reviewer, I will tell you that if you are not taking care of your sheet, you may be getting some feedback about that because we want to make sure that all of the questions have been asked of the customer, and thus you need to be doing that fill-in stuff. Moving on, income source documents. Sometimes there's a source document, sometimes there's not. Most income does have a source document. It might come from an employer, it might come from a financial institution, it might come from a gambling facility. They can come from all sorts of places, but uh, actually, I don't have any buts there. They can come from all sorts of places, and they may not exist at all. Maybe through the mail, maybe through online, maybe they can get it online, but also got it through the mail. That's me. I'm an oldish, and so I like to have my physical W-2 and not just one that was pulled off of the online. And you may end up dealing with a lot of customers that are older and will very much be mailed documents oriented. But other people, especially if they're younger, it's a lot more of like dealing with online documentation. We need to make sure that we get the source documents, that they get provided to the reviewer in the envelope. And the other thing I want you to think about is if they are saying that they didn't get something or they lost something, oftentimes we're going to need it. That's something that's going to be maybe a conversation with your tax site manager or your reviewer to see, do we actually need this document or not? Because like I said, it varies. And if they don't have it, what's going to end up happening is either we're going to work with them to see if we can get something from online, which we can then print out at the site, or we may have to send them away and have them come back either later in this clinic or schedule for another clinic time. So talking about the printing out their tax documents, every tax site is going to have one of these QR codes to submit a document to print, and as well as the actual website address to do that. Customer can scan the QR code, upload a document. You're going to work with your tax site manager to get it printed. We're super high tech these days. 20 years ago, there was no tech except for a calculator. So we have it so much easier now. We live in wonderful times. All right. Now, on the topic of income, you need to understand that sometimes income is taxable and sometimes it is not. On the slide, you can see some examples of both types. And you also, as a twist, some things that are taxable at the federal level will not be taxable at the state level and vice versa. So taxable income may be maybe something that applies on one part of the forms you're working in and not another. These are for some, but here's a very standard taxable income: wages, retirement account income, self-employment, cash payments, the stuff that we wouldn't, common non-taxables, gifts, foster care payments, public benefits. You have a lot more information about that in your manual. Starting on pages 68. So let's start talking about the various income types. We start with the wage income. Here is a example of a fairly typical looking W-2. W-2s do not always look this way, but this is a pretty common way that they can look. And however they look, they're going to have the same sort of commonalities of a variety of boxes with numbers for the boxes themselves, as well as some of the boxes or all, different boxes may or may not have actual data entered into them. Very standard to see boxes 1 through 6 filled on a W-2, and you may see other stuff as well. Has everybody received a W-2 in their lifetime? Are we getting any answers in the chat? Is there anybody who has never seen a W-2?
People are just reacting with thumbs up, which is fun.
I'm not getting those thumbs ups. Interesting. All right, let's look ahead on parts of the W-2. First off, there's going to be box A is important because that's the employee's social security number. Box B is important because that's the employer's EIN, which is equivalent to may be the social security number, but more likely it's going to be just the entity or employer-based equivalent of a social security number that businesses get, and then you've got their address and including the zip code. One thing we want you to be aware of here is that you should enter this stuff correctly and that this employee's social security number may not match the one that you entered into the software when you created the return. And that's due to some people having ITINs and them having uh, social security numbers that are not true social security numbers. Alrighty, let's see. There we go. Boxes D and E, we ignore the control number. Do not do that extra data entry. Oftentimes it'll just be blank, but it's an unnecessary box. And then we want you to completely just as an always rule with the W-2, except for the boxes where we're like, you don't need to enter that information. The ones that anywhere where you are entering the information, we want you to make sure that it completely matches what shows on the W-2. You are doing a mimic or a carbon copy of the W-2. So employee's first name, initial. If this differs, again, if this differs from what's on their intake sheet, we still want you to use the one that's on the W-2. Because sometimes their addresses change, but we just want to make sure that the W-2 looks like what has been sent in to the IRS. All right, boxes 1 through 10, although we're not showing you all of those boxes. You're mostly going to see stuff in 1 through 6, but you may not see things in like 2 through 6. Maybe you're going to see stuff in 7. Maybe you see stuff in 8. Just pay attention to those boxes, mimic them. It's important to get the withholding information. It's also important to recognize that once you have input box 1 and box 2, the software is going to autofill these, and they may not match what is actually on the W-2. So again, make sure that what you have when you have completed doing your inputs matches exactly what's on the W-2. The reason why this can differ is things like Social Security tips and allocated tips and possibly a few other random things in the world of employment can lead to the standard Social Security wages and Medicare wages and taxes withheld differing because sometimes there's like non-tax, you have your wages and stuff, but there's non-taxable categories and things that can alter what's happening on your W-2. Questions? Your main takeaway when dealing with W-2s is match what is on the W-2. Tax withholding is super important because that determines whether people owe money or not. That's the main thing. Credits and whether they have withheld properly. Um, those are just really important. So we want you to get that right. The most common mistake, as it is in bold, not entering withholding. Different forms, the withholding is going to be in different places. Learn to look for the withholding because well, if you don't give us the withholding, I mean, the reviewer will probably catch that. But, sometimes reviewers are also asleep at the switch. We don't want to get that to get through and for them to owe any extra money unnecessarily. The way that income tax withheld works is that is directly subtracted from the tax that somebody owes. Questions? All
Jeff,
right, now
there's
we
a
move on.
question in the
Oh,
chat.
okay.
Um,
We'll go
Iman
back
is
to that
is
slide.
wondering if there is a decimal amount, do we need to round that up?
You can enter it in the software or not. Um, it's those decimal amounts it would be so rare that they would matter that we typically just round up, round down, but whether you round up or round down is not probably going to make it one bit of difference on anybody's return.
Right. And if you don't round it, the software will round it for you.
Yep. Okie doke. All right, back to the slide for box 12. Box 12 and 13 being sort of related to box 12. This is where, like, various things where the employer takes money out of your main paycheck and allocates it to things, your health savings account, your 401k, your 401(b). There's a list in your manual. At the oh, Actually, it's in the back of the W-2. You can, if it's not somebody's, if it's a pre-printed came from the employer W-2, then on the back they typically are going to have what all the codes mean. The codes are also listed in your manual, Pub 4012. At least the common codes are in your manual. And if we don't get those entered correctly, that can create problems to where we miss getting credits. So do your best to make sure that you capture anything that's in box 12 and both the amounts and the letters. The letters will be input using a drop down, I believe. And the retirement plan is, even though I don't have this listed in my slide notes, it's really important that you get this correct. If there's a retirement plan, please, and the X is checked, please get that checked because that also will have an impact, can have an impact on the return. Pretty rare to see statutory employee or third-party sick pay, but not out of the question that you could see it. This was all on page 70 of your manual. All right, getting into the swing of this. Doing things over Zoom is just different than doing it in a room. So
You're doing great, Jeff.
forgive me for my a little bit of I don't know what I'm doing. I'm starting to get into the swing.
That's
All
right.
right, pages 69, 71 of the manual. This Form W-2 state section, as long as it's Minnesota state income, we want it input. Technically, you can input it from other states as well, but it's not really going to be used by the software. Like we're not producing anything except for Minnesota returns. Federal and Minnesota returns is all we do. But we still want you, if it says Wisconsin or Arizona or California, wherever, we still want that input into the software. Don't miss those sections. And that, I would say that's a general rule for any of the standardized forms that show income is don't miss the state information. And we are not showing it on here, but the most important thing, aside from the state, like the state wages, the basic income information that's stuff that, it's yes, it's important, but it's probably going to, it'll oftentimes it'll match. Like that's probably going to be created from, like the software is going to pull that down from the box one. But we got to make sure that the withholding, which is not shown, is it on the next screen? Nope, it's not.
Isn't it the $1,008?
Yeah, that's the withholding. Yeah, that is the withholding. So it doesn't say withholding on it, but that's your withholding. Oops. That's your withholding for the state amounts. So just like we don't want you to miss the federal withholding, do not miss the state withholding. And we are not a local withholding state, and so you shouldn't see anything in box 18. Okay. So I mentioned the ITIN, and on the don't form W-2, it just this is I've already talked about it, but so we have what they're calling a placeholder Social Security number that is used on people's W-2s if they are ITIN carriers. And I believe that there's been discussion on ITIN. It starts with a 9. It's a 9-digit number, but it starts with a 9 as opposed to all other Social Security numbers, which can start with a 0 or a 1 or 2, 3, all the way through 8. So if you did an input of a 9 when you were doing the initial basic information on a customer or dependent or spouse, if it doesn't match on the Social Security number, you are still going to use the number that's on the Social Security number. You're never going to want to put a 9, a, a Social Security number that starts with a 9 because that's not a Social Security number into the
Right.
W-2. Um, and we give you the caution about being sensitive around it, just because, it's they're not really the most legal documentation, but we don't talk to people about them having a non-legal Social Security number. We still want people to pay their taxes, and so um, they
You
should
mind
be
if I jump
filing
in,
and
Jen?
yeah, please jump in.
Yeah. So just like with everything else, you enter into the form exactly what is on the W-2, even if it doesn't match whatever the Social Security number is on the return. So for people who don't have Social Security numbers, as has already been mentioned, I think in session A, the IRS will provide them with an ITIN, an individual tax ID number, so that they can pay taxes. The IRS is like, we don't care if you're here legally, we want you to pay taxes. And so, Social Security numbers, though, are required to legally work in the United States. So, in order to work, people get Social Security numbers. They find them, they borrow them, whatever. But that's why the Social Security number on the W-2 will not match their ITIN. And so that's why we call this a placeholder Social Security number. And do not ever talk to someone about working illegally or using someone else's Social Security number or a fake Social Security number. We call it a placeholder Social Security number if you need to talk about it at all. But mostly you just enter what is on the form.
Yeah, I can't even in 20 years, I don't know if I've ever had that discussion. Maybe behind the scenes I have those discussions, but
Mhm.
you know,
That's helpful to know,
as
Jeff.
long as we got a number, that's all we really care about. All right, before I move on, did anybody have any questions about wage income? Anything, Holly?
No.
All right, well, we're moving into page 98 of the manual, unemployment income. Very common to see unemployment. Comes in on a 1099-G. Minnesota Department of Employment and Economic Development. If you do a lot of volunteering, you will know their PO box and stuff like that. Um, but the software is probably going to fill it in as soon as you put in the payer's federal ID number, because uh, we tie this information off of that in the software. The things to be, it's a very, this is a super simple form. I'm showing myself my cursor, but I'm not showing you all. Moving
No,
off
we
of
can see your cursor.
yeah, but I was doing it on my own screen. You don't see the cursor right now because I'm showing it to
Um,
myself
good point.
on the non-presentation slide, on the notes slide. Um, you'll see information in unemployment compensation, and you may or may not see withholding in 4. Those are the main boxes you're going to deal with on this form. We have it cut off here. You could also see state withholding. Usually if there's federal withholding, there's going to be state withholding, and it's a nearly exact, like state withholding is half of the federal amount, and it tends to be 10% if they've asked the state to withhold. It's 10% at the federal level and 5% at the state.
All right, friends. So I'm going to show you where to go. The thing to know about tonight is you can just watch. If you don't have your practice lab set up, if you want to come back later and do it. But the way that you can always get to all of the stuff on the training site is to start from the Prepare and Prosper homepage. And if you go up to training site in the top right corner, that is going to take you right to all the training site resources. We are in the basic tax training right now, so I'm going to click on the top one. And this is where I got the link to the manual. So I'm going to keep the manual pulled up. We are going to be working with our practice customer here, Tina Parker. So I'm going to open up this document that has the intro to her with her Social Security cards, which for those of us who were here last night, we started the return and entered them. And then here we see her W-2 and her unemployment statement on the second page. We may also need her intake paperwork. So I'm going to pull that up. And then to get to the practice lab, the link is here. Click here to log into the practice lab. I'm going to put this in the chat. Hang on, I just need 1 second to pull up the chat again. So here's the link to the chat. Who can tell me what the first thing we need to enter when we are trying to log into the practice lab? Thanks, Lee. Train Pro Web. Friends, if you can, in all caps, type, oh, you're so good. Type into the chat, Train Pro Web, just as a fun exercise together. Laura, appreciate you. Chris, thank you. Train Pro Web. So every time, beautiful. You're all hearing with me. Every time you go to log into the practice lab, Train Pro Web, and that gets entered right here, Train Pro Web. Okay, so if you have your practice lab account set up, log in. If you don't have it set up, you can do that while we're doing this, or you can do it on the break and you can just watch right now. Okay, so once you're logged into the practice lab, go to practice area. And what you all, this isn't funny, this isn't the right page. Here we go. You should see this page when you log in where you are saying, welcome to the practice lab, start a new return, client search. We have been working in tax year 2024 because the Minnesota software is not out. It's not ready or published yet for 2025 in TaxSlayer. So when you go in, you can change the tax year up here to 2024. And we are gonna, if you have already started Tina's return, you will go to client search. If you have started the return and just entered her dependents and the basic information, we should have Terrence and Tasha in here. Oops, dependents, add edit. Great. And we're going to enter income. So you can find income under federal section. If you go to the left-hand menu, it's the second option, federal section and income. First, we're going to enter Tina's W-2. So that's the top option when you go to income and you hit begin. Okay, friends, I'm actually going to do a split screen so I can have both up at the same time. We're going to open Tina's. There we go. So we're going to enter the EIN on Tina's W-2. And the EIN we said was box B. So it is 7104151188. 7104151188. By the way, this is a standard W-2. Jeff, they're mostly standard W-2s, right?
Yes, almost all the the number of times it's a corrected or something like that,
But there would be
exceedingly
something on the top.
exceedingly rare.
Okay, good. So usually, I mean, when you guys enter the EIN, does Walmart pop up for you automatically? Just curious. Okay, Michelle is saying yes. Great. So that's common if TaxSlayer can identify who the EIN is. But we're still going to check what it says, 702 Southwest 8th Avenue South, 72716, Bentonville, Arkansas, because that's where Walmart is based. That's different from this income. The income was earned in Minnesota. Okay, I'm going to go down to more employee information. Control number D, nothing. So skip that. Tina's name is correct on the W-2, Tina Parker. Oh, look at this. The address on her W-2 is different than what she gave us for where she actually lives. So even though the address on the W-2 is incorrect, we are going to change TaxSlayer to show the incorrect address. And we'll tell Tina, you may want to make sure that your employer updates this because they have the wrong address for you in the system. So 2702 DuPont Avenue South, and we're going to add the apartment number as well, apartment 10. 55408 Minneapolis, Minnesota. Okay, so we're down to box 1 now, entering Tina's wages, which is 35540, $35,540. Looks like Tina had $980 in federal withholding. And these other boxes we're going to check, but the ones that automatically filled 3, 4, 5, 6 look great. So what is the next thing that we're going to enter here, friends? What's the next thing that comes up on the W-2 that applies to Tina?
Box 12.
Yeah, box 12. So it looks like 12A, we want to choose D. Code D, $500, and we're going to move on.
That's my
next
understanding too.
So we're going down to the state section, and we're not box 14 because there's nothing there on her W-2. A little further down to the state section, and I believe you can just start typing Minnesota. You don't have to actually go down and find it. And employers have a different state ID number, like Jeff said, and this one is 4499082. Same wages and $700 in box 17 of state income tax. And we're going to hit continue. Curious if anyone, oh, I have friends in the waiting room. Come in, come in. Okay, folks, thanks for your patience if you were stuck in the waiting room. We are currently entering a W-2. Any questions or reactions or thoughts or anything that you think I missed mentioning, returners? Okay, we're going to move on, and we're next going to enter Tina's unemployment, her 1099-G. And so in income, if you go to the federal section, we're still in income. You want to, there's 2 places where it shows the 1099-G, but you want to look down. It's like the 6th option down where it says Form 1099-G, unemployment compensation. So it's not the 2nd option in the income list, it's the 6th one, and hit begin. And this is a super easy entry. So the federal payer ID for the Minnesota Department of Employment and Economic Development is 411681137. And once you enter that, the payer's name should auto-populate. Minnesota Department of Employment. We're looking for, there is no phone number on the form, so we're not going to enter a phone number. But in box 1, we have unemployment compensation 4705. Whoops, but don't put a minus in front of it like I just did, 4705. And no withholding on this 1099-G. We are gonna, Jeff, do we still enter the state info if there's no withholding? No Minnesota withholding.
It's not really necessary.
So
But
it
I
sounds
mean,
like you don't have to.
typically, typically we will if it's there, but
Hmm.
it's unnecessary keystrokes. I don't think any reviewer is going to have a problem
Sure,
with it not being entered when there's no
sure.
uh, state withholding. I know
Okay,
that I don't. If there's no state withholding it, we don't really care.
sure. Okay, so regardless, we enter the state information. And let's just double check Tina's payer information. So her address is correct here. I am going to throw in the apartment number though. Is that what you would do, Jeff? Do we add the apartment numbers?
Um, on that form, I'm less concerned about it.
Okay. And hit continue. And that's it.
All right, we're moving on to retirement income. That's pages 74 through 80 of your manual. The older the person is, the more likely you're going to see some retirement income showing up, or they may see it show up because they pulled money early from their retirement savings accounts. All righty. Pension and annuities form 1099-R looks like, well, it can look like just like the W-2. It can have a variety of looks. It can even be like a full page as part of a larger like brokerage uh, form that is sent to the taxpayer. But this is the most standard looking 1099-R, and I believe we're going to now cover a few things on the form that we want you to be aware of. I'm just checking my notes. Is there anything else I want you to be aware of before I start moving on? Employers, this may be a payment from an employer. Taxpayer might have created their own retirement account. So it's not necessarily tied to the employer, but it oftentimes is. And there's a few other types of retirement distributions, and you're going to mostly pay attention to your manual for that. All right, page 76 of your manual. We're back looking at the intake form, and sometimes retirement income is advanced topic, and sometimes it is a basic topic, and this is one where it's often enough a change that we need you to be aware of whether you can do the basic or not. Treat it as a basic 1099-R or not. So if going back, if box 2B, taxable amount not determined, has been checked, that is what is going to trigger that being an advanced topic. Except in the instances when it's a rollover, which is a code G, which would show up. Ooh, cool. All right, as long as I don't scroll too far forward or backwards on my wheel. The codes show up here, distribution codes. If it was a G, we wouldn't care that the taxable amount has not been determined because rollovers are special things that really don't have a tax impact in most instances. All right, figuring out how to use my scrolling wheel. So we want you to be paying attention. Is the taxable amount not determined or not? If it has not been determined, that's an advanced topic. If you're not advanced, if you didn't pass the advanced test, do not touch that. Move it on to the talk to your tax site manager. Say this is an advanced topic, and I'm not supposed to do this. And as always, asking questions. Anybody have questions about that? Page 74 of your manual talks about box 7 codes. Those codes tell us things like, is this going to be taxable income? And most importantly, was it an early distribution? Early distributions are our enemy as tax preparers for our customers because it means they're more likely than not going to have to pay a penalty for taking out money early. So let's talk about that. Code 1 is your early distribution. You will see plenty of Code 1s this tax season. If somebody takes money out of the retirement account before they have reached the age of 59 and a half, they could get an early distribution penalty. Early distribution penalties are automatically added in the software, and that's a 10% tax. But there are exceptions, and so we do things in the software sometimes to try to make sure that they don't pay the penalty unless they're really supposed to pay the penalty. So that's page 79 of your manual. It'll show the list of exceptions. And you're going to be asking, did any of these exceptions apply to you? Did you use the money that you pulled out from retirement to pay for your education? Did you have an emergency? Um, there's I believe, off the top of my head, I'm pretty sure if they use it for medical expenses, that can end up being something that gets them out of the penalty. If they are saying there's an exception to the penalty and you're not finding it, talk to the manager. Entering exceptions, by the way, is an advanced topic. And lastly, I'll say that the Pub 4012 that you received in your bag is another place that you can learn more about the exceptions. All right, we're going to move on, looking at a couple of different examples so that you understand how this works. Or are we? That's maybe an old note. Yeah, that's an old note. I was looking at an old note. We're not gonna look at examples right now. All right. Here's another type of income from Social Security Administration. It's going to look like this, or it can look like this. Mostly it'll look like this. Sometimes they'll get a printout from Social Security Administration, in which case it'll look like a printed out page, but it will give you the same, usually give you the same necessary information. I'm not actually going to claim it's going to give you everything, but it'll give you the most necessary thing, which is the box 5 benefits. Another thing to be aware of is that Social Security isn't just for people who have reached the age where they can pull Social Security. It's not just for people who are not working anymore. People can work and still get Social Security payments, benefits paid out to them by the government, and survivors, people who their spouse had the Social Security benefits, but the spouse died, those survivor benefits move on, and persons with disability is another common way that Social Security, the RSDI stuff gets paid out. One thing that we want you to, okay, so just looking at this form, the things that I as a reviewer care about, the name, the Social Security number, the beneficiary, box 5 benefits, and the Medicare B. There's rare occasions you'll come across where there's benefits being paid or repaid in a different year. And really it just ends up being seen box 5 will be adjusted if that's the issue. All right, Social Security. The thing about Social Security is that they have another abbreviation called SSI, which is not it's not Social Security income. That's Social Security income is RSDI. Supplemental security income is SSI. We report the Social Security income on the federal return. It's the SSI that gets reported on Minnesota's forms if they are going to be taking advantage of the M1 rent or the M1 PR property tax form, which is something you'll learn about in session 5. RSDI benefits, you will have the SSA 1099 in one format or another, and that's based on their work history. SSI benefits no official tax form. Maxes out in 2025 at $967. So this is basically work-based is what is Social Security. Needs-based is something that comes from the state. It's a and well, it doesn't come from the state necessarily, but it'll come through the state. And one way you can tell if it's Social Security income that people are talking to you about, or if it's SSI, is if it's over $1,000 or here 967. That's going to be a good indication that you're not dealing with SSI. Another thing I'll say about SSI is much more likely to be somebody is disabled. Typically, our SDI benefits are not taxed, and especially for well, I shouldn't say typically. For other people, they can be taxed, but for our customers, it's rare-ish for them to be taxed. Not unheard of, but not common. TaxSlayer is going to figure it out based on things that you've input. Taxpayer married filing separately, live with spouse at any time during the year. That's going to be something that could trigger them actually having to pay on their Social Security benefits. And if their taxable income plus half of their SSA benefits is above certain amounts for single or married filing joint, that is another trigger for they might have to pay a bit of money on the retirement benefits. Let your software do the work. Page 76, talk about Social Security benefit situations. Children are sometimes listed on the form as the recipient. We do not put that information onto the tax return. Same if it's another dependent. Sometimes people have, like a disabled relative living with them, and Social Security is sent to the house, and we would not put, the name needs to match what's on your forms. If it's not a spouse or a taxpayer, then do not include that income from Social Security. Uncommon situation, literally quite uncommon. Railroad retirement benefits, they have a Social Security element, but they also have a retirement plan benefit element. So they actually come in two different forms, a green one and a blue one. So it's sort of like combining the 1099-R and the Social Security, but in two different forms. You're just not going to see this very often, but we want you to be aware that it can happen. Is it the last one, I think? No, it might not be. Self-employment income, we're moving on 90 to 96, page 90 to 96. Self-employment income, a very common type of income that we're going to see. Independent contractors, people working for cash, freelancers, consultants. Here we say most people report income and expenses. They'll report income. They may report expenses. Some do, some don't. Some don't track it. Some don't have expenses. Many people who are doing self-employment and we'll run through our self-employment stuff. 1099 NEC is a pretty good indicator that that's self-employment. Self-employment is an advanced topic. So if you get self-employment and you are not trained on self-employment, talk to your manager because you need to shift that return on to somebody who is advanced certified.
Hey, Jeff, and
Yep.
or any of our returners, I would love the new people to hear why sometimes people don't know that they're self-employed.
I'm going to give others a moment to.
Question is, sometimes you get customers who don't know that they're self-employed, and why would that ever be the case?
They still work for a
You're
company.
stumping me, honestly. Uh-oh.
Deba, were you saying something?
I was just saying they can still work for a company and be more of like an independent contractor versus like having their own business.
Or yeah, that's a great point. Yeah, I was also thinking what Sarah shared in the chat, like think like someone who works for Uber, or any other like app or just any gig job, like you think of yourself as working for a company, working for a place like Uber. So I've heard that people don't identify as being self-employed, or they don't think of themselves that way, and so they don't share that they just think of it as another job. So this sometimes has an education component to it, helping the customer understand like you are self-employed. We can tell that because you have this 1099 NEC. And at that point, if you're not advanced certified, passing them off. Michelle's
Yep.
question, do they get a 1099, or do they keep track of their own income?
For drivers, I mean, how would they know if they weren't self-employed? I mean, you would think that they would know that they were self-employed if they would get or receive a 1099 or something to that effect. Guess I'm confused by how they would not know.
Well, it's not like Uber tells them, so now welcome. Congratulations, you're self-employed. Uber just sends them tax forms like every other job sends tax
Oh,
forms.
okay, gotcha. I did
Yeah.
see, I don't have any Uber friends, or I would know that.
Yeah, thanks, Michelle. And thanks, Sarah, for adding in the chat. Like, people don't really understand the difference between a 1099 and a W-2. Back to you, Jeff.
All right. Moving on self-employment topic, page 22. So we have a self-employment program that we send not everybody who has self-employment by somebody who's had even more training than somebody who is just tested out advanced. Because the advanced testing is, just runs you through some very simple things, making sure that you understand basics about expenses and how to report mileage. But for people that have more complex situations, either because of their like Mary Kay, sometimes like Mary, depreciating assets. Um, there's all sorts of stuff that just can be much more complex and that we want more trained personnel to work on, and that's what the self-employment program is for. And also anybody who's self-employment income is more than $10,000, they need to go through the self-employment program until it's filled up. That's the one problem with the self-employment program is it fills up. So if they don't get in early enough, they may be having to pay somebody else or buying TurboTax. All right, we have a few out-of-scope topics around self-employment if they drive a cab as opposed to Uber or Lyft. Actual cab drivers, people who have the medals, is that what they call them? Medallions, driver medallions, clergy, that's special stuff around clergy housing that we don't touch, corporations we won't touch, partnerships, rental income, businesses with employees, that's all out of scope. You would have to send the person away after talking to your tax manager saying, this is not something I'm trained on. I'm not allowed to do it by the IRS. All right. Questions before we move on to the next slide?
No questions in the chat.
Gone through a fair amount of stuff here. Oh, awesome. Well, then that means we are on our 10-minute break. Okie dokie. So we just covered a handful of things that are pretty common types of income, the wage income, unemployment, retirement incomes, Social Security. There's a lot of other types that we didn't cover. Those are in your book. And we're going to talk just a little more about those, but pretty briefly. And here's how we're going to do that. Okay, good. I see that the slide is working properly and it did not give you the answers right away. All right. So we want you all to pull up your manuals or pull out your manuals and figure out answers to either of these questions. What kind of gambling winnings are taxable? And in doing so, you're either way, whichever question you decide to go with first, tell us where or figure out where you're finding that answer. Second question, does interest from a bank account need to be reported? I'll give you a couple of minutes to learn how to use your manual a little more deeply. Remember, there's a table of contents toward the front and an index toward the back. All right, that feels like it should have been enough time, possibly, for people to get one or the other answer, if not both. Anybody want to, or maybe people pop into the chat on your answers on one or two and when you found the answers.
We have some comments in the chat already. Jeff, if you want to pull up the chat on your side, I know it's harder to do that when you're sharing your screen. People are saying that the answer to the gambling winnings question is on page 100. And all winnings must be reported. And you can deduct your losses, but only up to the amount of your winnings. And for question 2, page 72. And yes, yes, bank interest needs to be reported from bank accounts, and it will come on the 1099 INT.
The first time I trained on this session, there was a lengthy discussion in the room about it, a fairly lengthy discussion about interest from a bank account for smaller amounts because the IRS doesn't require the banks to report anything less than $10. However, if the taxpayer is indicated on their intake form that they have interest income, that that tells you that you need to be asking the probing question about how much it was, and if you find out that there was an amount that they received, be it $1. If it's under 50 cents, then we don't care. I will say that. But otherwise, pretty much any amount of income, we expect income to be reported if it is a reportable taxable income. And if people were not sure on the gambling taxability winnings, you can subtract your losses from the gambling winnings. And the other quick note about that is that rule is going to change slightly next year. I believe it's next year that there's like a percentage applied to the what you can deduct or something like that. But
Yes, because this year they can deduct 100% of their
losses
up to the
and
amount
it'll
of
be
their
like
winnings.
90% next year,
That's
something
right.
like that.
That's right. People in the
All right.
gaming industry are upset.
Yeah. I don't have much sympathy for that, but that's my own personal opinion. I'm not speaking on behalf of Prepare and Prosper. All right. Hey, come on, start moving slide. There we go. Here's what we were saying. Gambling winnings are taxable whether or not the customer gets a W-2G. So in terms of taxability, they are, but you do have the ability to deduct amounts from them. But all gambling winnings are technically taxable, and interest, even in small amounts, should be reported. All right. Now we're going to move on to the topic of adjustments. If you had an actual physical printout of the 1040, any version of the 1040 form, a 1040, a 1040 EZ, a 1040 SR, or whatever they call the senior 1040, they are structured in a way that you input basic information about the person and taxpayer, any of their dependents, things like that. Then you move on to income, Then you move on to adjustments. And then there's a few other sections after that. And the rest of your training will be dealing with all that stuff. When you think about adjustments, this is a pre-tax change to the income. So tax hasn't been determined. We're getting to the point where we're figuring out what the taxable amounts are going to be. You may or may not see adjustments like on a particular client. These are special cases. Income, probably they'll have income, although some seniors, not necessarily really so, not important income anyways. Adjustments, it depends. These are just kind of one-off topics that have been written into the code by Congress. Right. Oh, things for you to be aware of as we move forward here. There's in the manual. So this is we've stepped out of this training. You've got your tax manual in front of you. We keep the adjustments when we're talking about them in the manual. They're in different places. Federal and mineral. There's a Minnesota section of your manual, and there's a federal section of your manual. So adjustments, the topics are specialized to each section. But as we deal with this in our training, we're just going to talk about all the adjustments that we want you to be thinking about. All right. What is a federal adjustment? I sort of explained that just now, but maybe not fully. We have something, we've done the part where we're getting people's total income. Adjustments, as you can see here on the slide, tax favored accounts, certain types of expenses, certain life events allow the reduction of the income and taking money out of the, lowering the income in order to get to what we call the adjusted gross income. And adjusted gross income is a concept that I would think a lot of you are aware of, because like we put a lot of AGI is used for a lot of things, not just for your taxes, but anybody doing stuff in higher education, trying to get financial aid, AGI can be important, and other entities as well. Pay attention to your adjusted gross income. It's not just the IRS. All right, Minnesota adjustments are handled through the Form M1M, although in your software, whether you're going to the Form M1M or not, it'll vary. But Minnesota handles it, and additions are in one part and subtractions are in a different part of the ultimate form that gets spit out of the software. If we're making additions to income, that means it's something that is not taxable at the federal level, but is taxable to Minnesota. And subtractions is kind of the reverse. Something that was taxed at the federal level, but the state of Minnesota considered it to be a non-taxable source of income, and so they will subtract it out of the Minnesota forms. Questions about that? I'm not sure I explained that as beautifully as I could have. Anything, Holly?
Nope.
All right. Here's a very common type of contribution. As you'll see, sort of midpoint of this upper part of the form, this is a Minnesota topic on page 113 of your manual, charitable contributions subtractions. The thing that is the charitable contributions that Minnesota cares about happen is this subtraction, and it has to do with contributions over $500 if a taxpayer is not itemizing their deductions. And we haven't talked about itemizing deductions yet, but we will during this training. Contributions can include cash and non-cash contributions, which is a change from an earlier way Minnesota was treating it, where it had to be a cash contribution. But now it's cash and non-cash. And basically the subtraction is half of your charitable contributions that are over and above the dollar amount of $500 can be subtracted from your income at the state level. So doesn't work exactly the same as charitable deductions at the federal level, where they only work if you're itemizing deductions. Okay. Cool. All right, page 113 of your manual. What amount of subtraction is Tina Parker going to be eligible for? And I believe, Holly, you're going to have to take control again now.
No, I think
Oh,
that
no? Oh,
so
I
if
just,
someone gave so if you look at her form, which we're going to in a moment, page 3 of the link I just put in the chat, it shows that Tina gave $665. So go ahead, Jeff. It's just walking them through.
all right. So she gave 665. 50% of charitable contributions over 500. So the math is going to be $83. 665 minus 500, then divided by 2, or 50% applied to it as a multiplier. You're going to end up with $83, because half of 165 is rounded up is going to be 83. Does that make sense to people? And I will explain. The main thing you need to know is just to get those amounts that are over $500 into the software, because the software is going to figure this out for you. You don't need to do the math. It is so rare that you need to do the math, unlike when I started 20 plus years ago, where we use pencils and paper.
So now, Jeff, if you want to stop sharing, I will
All righty.
share.
You're in
Okay,
control, Holly.
beautiful. I love to hear that. So, friends, we're back at the training site here, which reminder I got here by clicking the training site on the PNP homepage. And I have Tina's tax documents open here. So this first link, I don't know if someone wants to put it in the chat for us, has her social security cards on the first page. And then on the third page, we have this. This is what a giving statement might look like. This is from a church. She's saying in the interview that she was unemployed for a little while in 2025 and her church helped her through. And so now she's paying it forward, is what she tells you. Thanks, Liz, for putting that in the chat. So she kind of, especially in the second half of the year, started giving to her church $665. So if we go back into the practice lab, and what do we enter here? I forgot. Train Pro Web. Thanks, Laura. Okay. And it'll time you out pretty quickly. So if you have to log in, and then we're going to go to practice area. So we're going to go tax year 2024, client search, and find Tina and open up her return again. So now we have her two dependents. We have her income from her W-2 and her unemployment form. And here's where we want to go to enter her charitable contributions. Even though this is a Minnesota state subtraction, we enter this in the federal section under deductions. So on the left-hand menu, it's not the top option, basic information. You click federal section and then click deductions. And as you can see, this third option, itemized deductions, mentions charitable contributions in its little description. So even though Tina's not going to itemize her deductions, Jeff mentioned this is still where you have to enter charitable contributions for it to flow into the state return. So deductions, itemized deductions. And we are looking for this sixth option down, gifts to charity, begin. So this is a cash gift to charity. So we're hitting begin at the top. So it was federal sections, deductions, itemized deductions, gifts to charity, cash gifts to charity. If you're looking at page, what page did we say this was? 113. The spot or like the path to get to this spot
Yes,
is
page
all
113.
awesome. It's always in the manual. So that little path that we just talked about, you'll find it in the manual. So later when you're like with a customer going like, how do I enter this? The path is right there. So the trick of all tricks for entering charitable contributions when it's cash is you do not have to enter the charity name and enter each date of donation, because in this case, she gave regularly throughout the year. What you want to do is hit the override button, and then you just get to add it all up and enter one cash amount. This would be the case if someone donated to multiple organizations during the year. You could take those giving statements, and which 501c3 nonprofit status organizations have to provide a giving statement when there was a charitable contribution that is tax deductible. There is one example of a time when giving is not tax deductible is GoFundMe. But generally, people receive this. It's like a tax document. They receive these giving statements. So if someone gave to multiple organizations, you could add it all up. In this case, we're just going to enter Tina's $665 here and hit continue. And that's all you do. And even though it was $83 for the subtraction, I think it helped $5 on her state return. And if you want to check that out, you can look at Tina's return. You can go to a little further down in the left-hand menu, summary print, and then the second option, if you hit print results, summary print results, it will print a PDF. A PDF of the return will pop up. And later, if you want to investigate where this ends up on Tina's return, you can scroll way down to the Minnesota section and look and see if you can figure out how that subtraction is flowing to her Minnesota return. So I think that's all on this, but curious if anyone
Holly,
has
do you want to
reaction.
show them the other way to get to that printing out the PDF?
You can go to the top, preview return, and then you can hit print your 2024 tax return here. And you click it once and then nothing happens, and you click it 2 or 3 more times, and then all of a sudden you get 3 or 4 returns that pop up. Or if you hit the summary print, it just shows you the 1040. So this is, if you're trying to see the rest of the return, this is not the best way to do it because you don't know what page you're going to. But if you just want to see page 1 and 2 of the 1040, you can just stop at summary print and not go into print results. Is that what you were going to say, Jeff?
Actually, I was going to have you, can you scroll to the top of the screen?
Uh-huh.
The view print return there with the icon, that's the one that I commonly use.
Oh, sure.
So
Does
there's
that work from
multiple
anywhere?
ways for you to have the same thing happen where you bring where a PDF gets
Yes.
popped.
Lots of
And
ways.
the last thing I would say just about this screen is as reviewers we never use this summary page or the 1040 view because it only shows you the federal stuff.
Mm.
And so
Mm.
since we're typically going to be looking at people's Minnesota returns as well, this just doesn't give us nearly as much stuff to work with.
Eric is asking about the steps in filling charitable contributions. Yes, really quickly, we're going to go to the federal section, deductions. You click deductions, and then you're looking for itemized deductions. In there, gifts to charity is the 7th option down, 6th.
The middle of the page.
Middle of the page. And then Tina had a cash gift. So we edit, and we hit override, which on page 113, there is an image of the override button. So make sure to consult your tax manual if you are unsure how to enter anything. And that's how we did that. Okay.
Alrighty.
Back to you, Jeff. Dahlia is asking, so Jeff, you're saying that you normally look at the PDF file.
Yes, I look exclusively at the PDF file. I just shoot past whatever is showing up on that screen in TaxSlayer itself because I don't get to see the same level of detail as I can using the PDFs.
All right, Jeff, you want to
All
reshare?
right.
Here they come.
I'm just realizing I needed to actually not just hit share once, but then hit the share button again after selecting my screen. All right, can everybody see that it's TaxSlayer
Yep.
time? And we've done that part just now. All right.
Beautiful.
Ready? We're going on to page 107 of your manual to talk about the IRA deduction. So an IRA is a type of retirement account, and if people have an IRA and they've made traditionals and if they've made contributions to what is known as a traditional IRA as opposed to a Roth IRA, then they may be able to see an adjustment of varying sizes. I shouldn't say small. Sometimes this does make a significant difference on people, whether they're paying money in or not. So that this IRA deduction of contributions, it'll show up on something known as the Form 5498, a maximum deduction equal to the taxpayer's contribution limit. Taxpayers under 50 can it would cap at $7,000. For people like me who are over 50, it caps at $8,000. Taxpayers' taxable compensation is the contribution limit if it is lower than the annual contribution limit listed above. And this is something that the software is going to basically spit out as long as you have checked the right boxes and input the right codes and the right amounts in from the W-2. So it's something to be aware of because it's important, but at the same time, it is not something that you won't directly touch the Form 5498. It's just one of those things that will show up in the PDF that you have virtually printed when you're done and are taking a look at what you've done before you pass on to the reviewer. All right, so I'm going to give you an example of how this works. Tyre opens a traditional IRA at her bank in 2022. She starts saving for retirement, contributes 50 to her IRA every month, worked full time, but her employer does not have a retirement account option. And this is the instance where we might have to do a little bit of inputting because it's not showing up on our W-2. The employer is not involved in this. $50 to the IRA every month, so 50 times 12, that's $600. She can take $600 adjustment, and that would happen through the Form 5498. But you're going to be going, through the left-hand navigation to adjustments and get to the IRA contribution adjustment. Questions before we move on to another type of deduction,
I have a quick question.
which is really an adjustment. Okay.
Is there a place on the yellow form where that shows up, this IRA deduction?
Yes.
Yeah.
Yep.
Okay.
They will they're supposed to let you know that they have an IRA,
Okay.
and then you get to ask them questions about the IRA.
Okay.
It's pretty rare for people to be just doing it through their bank in my experience, but
Got
if
it.
they've reported something and you're not seeing it on their W-2, then you're going to be asking, like, you said you've got an IRA, you said you were making contributions. Where is that? All right. Student loan interest is a quite common type of deduction. When you get into session D, you'll learn about student loans and credits. But here we're talking about the deduction. If they or their spouse is legally obligated to pay that debt or that loan amount, or if the loan is for a dependent who someone who used to be a dependent when the loan was obtained, then we're going to be looking to use that student loan interest to get them a deduction. We're on page 108 of your manual. There should be a Form 1098E that reports that interest, sometimes just a statement from the lender, possibly something you could get. If it's a statement from the lender, you might be able to pull that up online as well. This is a $2,500 deduction, and people who are in that least desirable filing status of married filing separately, they're not eligible for this. Other things you can be aware of, but you'll find on page 108. Interest doesn't qualify for the adjustment. It's loans from a related person, an employer plan, or if they're not legally responsible for the loan. We'll give you an example using Mai's student loan interest. Staying on page 108, Mai started making loan payments in 2025. Total income was $33,000, paid $4,800, and 2,750 of those payments went toward interest because, as we know, at the start of a loan, you're paying a lot more towards interest than you are to principal. All right, so how that ends up looking. And again, we said $2,500 is the limit. So we're only going to take and subtract 2,500, not the full 2,750 of interest paid. We're just take the 2,500, and our resulting AGI, assuming there are no other adjustments, is going to end up being 33,000 minus 2,500 for $30,500. And why is that important? That black box down here in the corner. If they have a lower AGI, most likely that means they're going to have a lower taxable income and a lower income tax. If it's a very small adjustment, that may not hold true, but in most cases, it just takes $50, I believe, to move around in the tax tables.
We have one of our practice customers who has this form, so I'm just going to put it in the chat if you want to see what a 1098E looks like. It is actually my form that I edited to be a fake form for someone else, so it will look a lot like this.
Cool beans. Moving on to talk about, briefly talk about even more federal adjustments. We're on pages 103 to 106 of your manual, and because you're seeing that as a multiple pages, we're just going to say there's educator expenses, health savings account contributions, deductions for self-employment taxpayers, alimony paid. All those are fairly common types of adjustments. The fun thing about health savings account contributions is that there's on the backside there'll be something else. So in reality, the contributions will typically balance out against money paid out of the HSA. So it ends up being a zero on most 1040s, a non-thing. And HSAs are a advanced topic. So you don't need to know about those as a basic tested out volunteer. Moving on, now we're moving to some Minnesota additions, some subtractions. When you're looking at the intake, the prepare and prosper intake sheet, the gray sheet as opposed to the yellow sheet. Do we have somebody waiting, or was that a comment?
I think that was the sound of someone leaving, actually.
Someone leaving. Okay.
Yes.
All right. So on page 2 of your intake sheet, toward the bottom of it, bottom half-ish of it, these are all sorts of different categories that you need to check with the taxpayer and customer to find out if any of this stuff applied to them. Student loan payments, quite common. Child born in 2025, not as common of a thing, but please be aware of that one because that's just an automatic, it's a baby bonus that Minnesota gives people. And the related, if there was a stillbirth, sad. That's not a fun conversation with the taxpayer, but if they know they're going to get a little bit of money back, it's worth having that conversation. many of these are just not that common. But at least show them the list. You don't have to talk through every one of these. They're pretty, for the most part, they're pretty self-explanatory. Uh, so, all right, moving on. Adjusted gross income is income minus those adjustments that we were just talking about. And it's what you get when you're done with doing that calculation. Um, and as I mentioned earlier, credit calculations are impacted by AGI. Agencies use it as a benchmark. So federal agencies, that is, use it as a benchmark for families' income if they're, looking to the other place that is going to have can have a big impact is like, are they going to be receiving various kinds of benefits like SSI, food stamps?
Can
Sorry.
we ask the folks who may have pulled up or printed Tina's return what her AGI is currently at? I put the link to her return in the chat. And that is on page 6 of the return, is the first page of her 1040. I don't know if you want to pull it up, Jeff.
I have to
There's a world in which you could
move
just pull
that.
it in front of the other one, unless you're
Yep,
sharing a
that's I'm
PowerPoint
I'm
directly.
working on it. It's just the screen sharing information is covering up my tabs, so it's harder for me to see it.
Sure.
All right, not getting into my reviewer brain, but so this is more than a 1040. This is why we pull up the PDF versus just using that one screen that didn't show you very much of a 1040 even. And
We can't really see if you'd zoom back in.
oh yeah, I'm on my big screen, so like I want that smaller. All right, adjusted gross income, line 11 on the standard 1040. Oops, geez. Good. People cool on that?
Yeah, I think it's helpful to see the visual of the 1040 as we talk about the stuff that's happening on the return. Thanks, Jeff.
Yep. And actually, since I've got this up, let me use this color. That's a pretty color. All right, so where are we at? You did your, oh, is this not going to allow me to? Hold on a second. Okay. I did this. Oh yeah. There we go. So page 1 of your form, intake form is getting you things like that. Then we just did income, which goes down to here. We got to total income on line 9. Then adjustments is just on line 10. Everything is on like subforms. Then we get to the adjusted gross income. And from there, we start to figure out what we're going to talk about next. Standard versus itemized deductions, which gets you to your taxable income. Okay. Shrink that. Ooh. All right, we're going to work off of this screen for a while. Except I need to see my notes. There we go. All righty, deductions. There are 2 types, standard deductions and itemized deductions. Standard deductions, this is on page 109 of your manual. These are the amounts that apply in 2025. Those are, for our clientele, significant sums of money that oftentimes will mean that when you have taken the adjusted gross income and then subtracted the standard deduction, they might be zeroed out and not have to. When by being zeroed out, it means that they're not going to have any taxes to pay. They're just going to be looking forward to hopefully refunds from us and the IRS and the Department of Revenue. All right. So different, what you need to know is you have to have done your filing status correctly. And different statuses lead to different amounts. You can see single and married filing separately are the least advantaged standard deductions. The most advantaged ones are married filing joint and that limited use qualifying surviving spouse. Then there are some additional things that can happen to the standard deduction for people who are dependents, taxpayers age 65 plus, taxpayers who are blind. Make sure that you check your boxes. For if somebody indicated on the intake form that they're blind, you need to make sure that we let the software know that they're blind. The software will automatically know if they're age 65 plus and should know about the dependent calculation. And I need to move the chat window out of the way so I can see. There we go. All right. Questions so far. Itemized deductions is the standard thing that you're going to see with pretty much everybody that you deal with, because to take an itemized deduction means something, typically it means something very bad has happened in their life. Pages 110 through 114 of the manual is where you can learn more about itemized deductions. But this statistic, less than 1% of P&P customers itemize, is probably what I want you to use as your main takeaway, along with knowing where in the book to find out about itemizing. If the interrelation between the two is, in some instances, somebody might be able to itemize and subtract more than, if they're single, $15,750. If they're a qualified surviving spouse, maybe they have more than 3,000 or 31,500 in expenses. Rare to hit those levels, because itemized deductions apply to specific itemized categories, or particular categories of items that people are allowed to, in various ways, add up to go above the standard deduction limitations. Page 3 of the intake sheet is where people are giving us the information about that, whether they would qualify for itemizing. And the tricky part, to me, the main tricky part of all of these itemized categories is that you'll see on the yellow form that they are all marked as A. However, a lot of people receive mortgage interest. A lot of people have other types of taxes that they experience in their lives at the state, local, real estate. A lot of people do have some medical, dental, prescription expenses, and a lot of people make charitable contributions. So an X mark on any of these A's all by themselves does not make those items advanced. It's only when those end up being high, very high amounts, significant amounts of dollars. And for the most part, that just means mortgage interest, taxes, charitable contributions may add to get somebody to an itemizing level, but it's because of medical expenses. That's when they end up having to potentially take advantage. And that feels like the wrong word, because it means a catastrophic event has happened economically in their lives. But that's how they get to itemize, in which case you better be an advanced, tested out preparer, because it's going to be a more involved experience with that taxpayer. All right. Anybody, well, before I move on, any more questions about the topic of itemized? We used to itemize a ton. Certainly not everybody was itemizing, but we used to itemize a fair amount of returns. And then the tax law changed back in 2018, and we moved to almost nobody itemizes at the income levels that our customers have.
No questions in the chat.
Cool. All righty. New deductions for tax year 25, because if there's one thing you should need to know about taxes, is that they change every year. Why do I not have a lot of things committed to my own memory about taxes? It's because they change every darn year. So page 114 and 115 of your manual is going to run you through some of these new deductions. These can be used in the nice thing about these is they can be used in addition to the standard or itemized deductions. These are cherry on top deductions, we'll call them. Married filing separately, again, being the least advantaged status, they can't use these new deductions, and people with ITINs can't use these new deductions. Then you need to have an SSN, a social security number, in order to use them. And then in the basic tax training, we do not cover no tax on car loan interest deductions. So if somebody is asking about that particular deduction, check in your manual, but we're not going to cover that topic today. Deductions for seniors. If somebody's 65 and older, they may be able to claim an additional $6,000 of deductions and 12,000 if both in a married filing joint situation are over 65. But there's a phase out to this if they're modified AGI, so it moves towards a cap where they can't use this modified adjustment, and it caps at $75,000 for a single person and $150,000 for married filing joint. And if you're writing all this down, I don't know if this is worth writing down, but it's on the slide. We're giving it to you so you're generally aware. You'll note that pretty much all of our clientele has got like our scope is around there. So nobody's phasing out if they're being seen by us. And these taxpayers still receive an increased amount for their standard deduction. All right, no tax on tips. Page 115, my understanding is this is still a little bit like in flux as to how this is going to work. Is this more recent information, Holly, or are we still kind of in, they're still figuring it out, right?
I don't know. Go with it.
Cool. All right, well, here's what we can tell you at this point in time, and it might change as the tax season goes on. Read your tax tips that get sent out by the Volunteer Resources Department every week. Taxpayers at the moment can deduct up to $25,000 of tips received in certain occupations, and that's fun that they've made it certain occupations only. Tips should be reported on their W-2. If tips are not reported on the tax form, that's an advanced topic. We expect taxpayers to self-report their tips that are not on the W-2, but we're not going to if they don't tell you about it, then there's nothing you can do about it, especially if you're not expecting it. If you know that they're a server, you're going to expect that either there's tips on the W-2 or there's a tip, more likely they're going to be reporting tips to you. But a lot of other situations, hard to tell. Separate entity needed to claim deduction in tax layer. So you're going to go into a different part of tax layer to do this stuff. And more on this topic, taxpayers. Oh, this is actually the different topic. This is the overtime topic. Overtime deductions. If you receive overtime compensation, certain taxpayers can deduct that. If there's a requirement around they have to be paid an additional amount above their regular wages. So here's how it's going to work. Okay, Holly's going to step in.
Well, I think what that was in reference to is that maybe an employer is very generous and gives like double time for holidays, but they can only deduct the pay that is by law required to be paid in addition to their regular wages. So that is time and a half. And so what this example is saying, it is only the half that is deductible. So if Perla makes $20 an hour and her overtime pay was $30 an hour, it's just that $10 that qualifies for this no tax on overtime.
Yeah, I've heard enough discussion around the office that I'm really dreading this one, to be honest.
Yeah.
We'll see how this works this year.
It will be messy because even a pay stub doesn't necessarily show what amounts were. It doesn't give enough detail to.
I'm like, oh, let's move on to the next slide to have this conversation. So here's what we can tell you now about identifying and calculating this. Because in tax year 2025, overtime has not been required to be identified separately on people's W-2s. We may have to be doing some work on our end to get at this information. So we need them to know or provide documentation showing their overtime or overtime premium amounts. Pay stubs can be useful, may not be useful, but can be. Needs to identify the amount listed in the total income received for overtime or the extra amount received. And for total overtime paid, divide by 3 to find the deductible amount.
Which is like in Perla's example where you could take the $30 but that is only if she was paid time and a half to get to the $10 of the half.
So the nice thing is starting in 2026. So next year it will be less painful because the W-2 is going to have a box 12 code that identifies overtime amounts. But we'll be swimming this year. Questions about that? I expect the questions will come when we're out at the tax sites this year. All right. How do we handle this stuff in TaxSlayer? Seniors, it's automatic. And then for tips and overtime, separate entities, here's how it's going to look. Adjustments, you go into deductions, adjustment, is that right? No, or is it its own thing? I'm confused about this, Holly, because I haven't seen how it looks in the software. Are we
As you
going
can
in
see,
through adjustments, additional deduct? Oh, there it is, additional deductions right in front of my facey.
Yep, you got it.
Right in front of my face in the middle of so on the deduction screen, they've added an additional deductions thing. As I said, we're not talking about the car loan interest one, but overtime, tips, those are the ones you have to do manual entry on. And by clicking in there, it takes you to links that will then be able to link you to where you're doing the entry. Ta-da! Questions before I keep moving on?
Kate had asked if this was only if the overtime deduction was only if they were itemizing, and I said no, this is one of the new deductions for everyone. And then I added in the chat a 40-page resource on new tax law changes from a VITA colleague in Alabama. And so if you want to read up on the new tax law changes, that's available to you from the training site.
40 pages, knock yourselves out, people. In addition to your manual. All right, page 98.
I have a question, please, regarding the overtime.
Yeah.
So there's no question in the intake form for overtime, right? So we need to remember to ask the client about this during the interview, right?
This is a great question.
It's a tough one because it's not addressed in any of the intake paperwork. You're right, Dahlia.
Thank you.
So it's a thing we have to just keep in front of mind. I would imagine we may be sending out tax tips about.
We're sure going to
undoubtedly
be
we're
tax tips
sending
on
out
this.
tax tips about these new deductions. So.
Yes. And Amuni was asking in the chat about the no tax on car loan interest. We think this is going to be really rare, but there is information in your manual on page 115 on it. So that's why we didn't talk about it here.
Yep. Okay. So here we're just kind of like pulling this all together. The income tax, we're taking the adjusted gross income, which of course was the income minus the adjustments. Then we are deducting from the adjusted gross income to get to the taxable income. So if you picture it in your mind, there's pluses to get to a minus, which is the adjusted gross income. Then there's a combination of potential other minuses to get to the taxable income. And that's how we think about if people have a taxable income, then they're going to have a tax. If they have a zero taxable income, then there's no tax. There's no simpler way to explain it. They've got taxable income when you get to the bottom of the 1040, line 15, this is your taxable income. This amount could be zero.
Sure, like if Tina
especially
made
if
less than the standard deduction.
Right, especially if their income didn't rise up to the amount that's taken out for the standardized or itemized deduction. That's typically where the big reduction happens, is at the itemized or at the deduction on or on line 12. Ugh. Words. Okay, so automatically calculated, but what does it really mean? How does that work? Income. Just a very brief primer on how income tax brackets work. This is not something we're expecting you to memorize. It's just, how does this stuff work? At whether it's the federal or the state level, there's currently only two brackets or income tax rates. At the federal level, it's 10% and then 12%. At the state level, it's roughly 50%, but not, it's a little higher than 50%, 5.35, 6.8. The way brackets work is up to, depending on their filing status, up to an amount, they are taxed at the first rate. Then only when they move above that rate do you move into the next highest tax bracket. We used to talk a lot. I feel like we used to talk a lot more about tax brackets because there were a lot more of them. And now the code has been so simplified and that we just have the two brackets and the tax system is much less fair. just being honest slash it's not even my opinion. It's just, that's the way it is. It's much less fair than it used to be.
Just to clarify, Jeff, there are more tax brackets, but these are the ones that are relevant for our customers.
Okay, good. Okay. I was like, isn't there more tax brackets? You're right. But there are still fewer brackets than there used to be. And their rates are much lower. All right. So the general concept, there's a certain level depending on the status. And once they go over that, then they start paying more in taxes. Whoops. There we go. Moving on. Tax liability. That's a taxable income. And a tax rate is applied to it to get to the tax. This is not how I think about this. I just think about there's a taxable income and then there's a table that exists out there that you check against to get the tax. But, in a more precise manner, it is
well, you need to show it on a slide
rate.
somehow, Jeff.
I mean, I started doing taxes for people 20 plus years ago when we really did have booklets in front of our faces and we really did check the tables to find the tax rate. So you got to forgive me for thinking in old ways. Tax liability, as it says on the slide, is another way to think about it. Taxes, and we can lower them using credits, which will be your next topic whenever you have that training. All right, quickly we'll start talking about other taxes. Page 122 of your manual. There's a self-employment tax. People are self-employed. There's a self-employment tax that is put onto them. Then there's the additional tax on IRAs, the 10% penalty. IRAs, other qualified retirement plans that have early distributions. All right, boom. Look at that.